Very good morning, friends. Now, since you have the basic idea as to what a candlestick is, we will be starting with the candlestick patterns one video at a time. Uh, First of all, I'd like to give you a broad idea as to what a pattern is. Generally, there are two kinds of patterns if we talk about candlesticks. One is the reversal pattern, and the other one is the continuation pattern. Reversal patterns are those which reverse the trend, and the continuation patterns are those which continue the trend. Let us suppose there is an uptrend which is there in the market, and some candlestick pattern gets formed which reverses the trend. So that pattern will be called as a reversal pattern. So from this video onwards, I'll be taking one pattern at a time, and we'll be covering around about 35 to 40 patterns in total. So let's get started. Once again, a very good morning, friends. As I've already told you, from this video onwards, I'll be covering up one candlestick pattern at a time. By covering the candlestick pattern, what I mean to say is that I will tell you what that pattern is and how to trade based on that pattern. These are some of the candlestick patterns out of 35 to 40 patterns which we will be covering during the course. Some of these patterns, they are single candlestick patterns, that is only a single candlestick is required to form that particular kind of pattern. An example would be a doji or a hammer. Some of them are combination of candlesticks like a bullish harami or a bearish harami, or an evening or morning star. So depending upon what kind of a pattern it is, it can have either one or five candlesticks in that pattern. So the topic today which we will be covering would be a gravestone doji. So this is a gravestone doji. It has derived its name from a gravestone which is there in a graveyard. There is a long upper wick and there is no or a very little lower wick, and the opening and closing price, either they are very near to each other or they are absolutely equal. And the perfect gravestone doji would be wherein the opening and closing prices are exactly equal. But please remember that this is not the thumb rule that a gravestone doji will have the opening and closing price exactly equal, but they can be near to each other as well. I mean, the body of the candle should be very, very small. So this is a bearish reversal candlestick pattern. By bearish reversal, what I mean to say is that there is an uptrend which is going on, and at the top of the uptrend, this gravestone doji gets formed, and after its formation, the probability of trend reversal is greater than the continuation of the trend. Now this is formed when the open and close prices are near each other with a long upper wick and no or very small lower wick. I have told you this earlier as well. This pattern suggests that bulls were doing well during the session. By bulls, what I mean is the people who want to take the price higher and higher. However, by the end of the session, bears took over and brought the price at or near the place where the price opened. The bears over here are people who want that the prices should fall down and not increase at all. The upper wick is much longer than the lower wick. This is simply because the prices, they opened at near the bottom. They went up during the session. By session, what I mean to say is it can either be a 1 minute time frame or a 1 day time frame. It can be anything. I mean, whatever chart you are looking at. So during that session, the price went far above. However, just before the end of that session, the prices came down very sharply and they closed near to or exactly at the same price where they opened. That is why the body is either absent or it is very small. The point to note is that the bears were not able to bring down the price below the opening price during the whole session. Yeah, this point is very important, that the bears, I mean the people, those who want that the prices should fall down, they were not able to bring that price below the opening price during this whole session. However, this does not always be true, as the price might go down a little than the closing price, which implies that the Gravestone Doji might have a small lower wick as well. So this justifies why there is a small lower wick at times. It is not necessary that the opening and closing price should be same. The thing is that the opening and closing price should be very close to each other, if not same. I have already told you about this thing. Though this pattern generally occurs at the end of an uptrend, sometimes it can be formed at the end of a downtrend as well. However, if it forms at the end of a downtrend, it does not have that much of power to reverse the trend as it has when it forms at the end of the uptrend. Now, one should not hastily act as soon as this pattern is formed. We should wait for the confirmation of the reversal of the trend by looking at the next candle which is formed, and then if the trend has actually reversed, take the trade accordingly. Now there are some indicators also, like relative strength index or RSI, or moving average convergence and divergence, which is also called MACD, and volume, and there are some other indicators also. Separate videos will be shared on the indicators during the course of this program. What I mean to say over here is that these should also be taken into account while making a decision to enter or exit a trade. I am not elaborating on these indicators as of now because it will make the situation very complex. Let us just first focus on the candlestick patterns only. We will take trades based on these patterns singly. We will not mix them with any of the indicators. Now this is an example of a Gravestone Doji, wherein this signifies that the Gravestone Doji has formed, and this is the confirmation candle, which tells us that yes, indeed the prices are getting lower and lower. Now notice that the Gravestone Doji has appeared at the top of an uptrend, and once there is a confirmation that the prices have started to drop, it is good time to enter into the stock for shorting. Now what is shorting? It is also known as short selling. Now this is only possible in intraday trading or while trading in futures and options. It is not applicable while trading in physical stocks, that means equity. Please do remember this point. I mean, this is very important. One should not forget this thing. You can short physical stocks, but only in intraday, not in swing or positional trading. Now we will see how to trade with a Gravestone Doji. Now after spotting this pattern, see, this pattern has been spotted that a doji has been formed. Now we will have to wait for the price to drop below the low of the candle which precedes the Gravestone Doji. Now this is the Gravestone Doji and this is the preceding candle. So the prices have to go below the low of this preceding candle, and we will enter into a trade only and only if the price gets below the low of this candle. So we will be selling at this price, which is around 1660. Now stop loss would be the high of the Gravestone Doji. So whatever high this Gravestone Doji has made, just take a few points above this level as the stop loss. So this is the stop loss, and do not sell till there is an exit signal. By exit signal, what I mean to say is we will be considering only the candlestick patterns right now, but exit signals can be other indicators also, like RSI, MACD, ADX, or any other thing. We will not be complexing the situation as of now. The exit signal which we will consider would be the candlestick pattern only at this stage. So this is the exit because a hammer has been formed, but we will not be exiting at this hammer candle because we will always have to look for the confirmation. So either you can exit at the next candle or next to next candle. I am giving you an option of two candles to exit because the first candle which has formed after the hammer, this has gone below also. We cannot say at what point in time it went below. If the price of this candle was above the high of the hammer during the entire course of the session, and just before closing of the session this price has dropped and closed near to the opening, in that case you can exit at this very candle. And if this is not the case, that means that the price was high only for a short duration of time during the entire session, then you can exit at this candle. If you enter a sell trade at 1660 and exit at 1500, a profit of 160 per share would be earned, which is around 9.6%. That was all for today. Thank you and have a nice day.